Hello again. I apologize for the absence. Been playing hooky for a while, but if you have been following this at all, we got our going back to this. We have our RIOT call that's expiring today, and 100 shares of RIOT. RIOT's way up, and if I was going to, I was planning to just continue with this strategy of trying to get back to selling covered cash secured puts and selling covered calls when necessary. But let's just take a look at something here. In order to keep this, we'd have to roll this position and go up at least to 850. And we'd have to pay out just to get that. I mean, if we went out, let's even go 35 days and look at that. And still, it's have to pay like 50 cents per share to roll it out that far. So, I mean, in order to avoid that, and also I think I found a better strategy. So I actually want to bail on this strategy with this account and go to a new one, and I'll show you. Let's just go back. So I'm actually going to just let that expire, and then I should have somewhere around $987 remaining, which, all right. It's not that I don't like this strategy. It's just that there are disadvantages, and I think I found something better. So we could just stay with it and wait. See, RIOT has actually recovered. So we just keep chasing it up until we catch up with it, and then, or at least until we break even with that, and then we can get out without losing money. But if I'll show you what I'm working with here. If you either Google or YouTube, if you type in Felix and Friends, uh, it'll get you this guy's channel. And his strategy, I think, is, and he'll tell you it's not really his strategy, but uh, it's a strategy that he uses. Basically, it's to find a trend. Let's so he looks for breakouts. This is just an example, and this is a software that he developed and offers. I can't remember. It's a paid platform, but you don't have to use it. I just think it's very convenient, and I think it's like $20 a month or something, if I remember correctly. Let me see. Anyway, like I said, you don't have to, but I like it, so I'm going to use it. So in this case, it's just looking for a breakout, and this is a good example right here. So here we have this kind of yellowy orange one, 50-day moving average. The purple one, 150-day moving average. Oh, I'm sorry. That's the 200, that orange one. The yellow one's down here coming up. So this one, it jumped way up. I believe that's today. Oh, Friday, July 18th, 2025. So it's pumping way up today. It had some good news, whatever the case is. And also this heavy volume, the increased trading volume, which makes it more convincing. Basically indicates like big banks and so forth are getting into it, which makes it more likely that the trend will continue. Let's look at another one, say MP Materials. And if you see, like, this would have been a breakout. that's a red candle, which means it jumped all the way up to the top of the candle and then finished the day down here. The next one started, if I can zoom in. Oh, that's fat now. Started here. It ran all the way up to here and down here at different parts of the day, and then ended up here. But this next day, if you wanted to wait for something more convincing, there's much more positive volume. We're above any recent highs, which could be, they call a resistance. Like if someone bought at that level and they're looking to at least break even, then they're likely to sell at that level. But we're past that. Let's see. Pretty sure, yeah, this one's actually at all-time highs right now. So using his strategy, you probably would have bought here or somewhere in here. And then you would have been following this up further. And that's the whole idea. So just to summarize, and I'll be getting into this probably next week. You look for a trend using this strategy. You want it to break above recent resistance. You want high trading volume, and you want it to be above the 50 and the 150-day moving average. And then you follow the trend. You buy in, and then you set a stop loss, which if the trend fails or doesn't really materialize as expected, then the stop loss will prevent you from losing a lot. It'll kick you out before it gets very far, and then you just go back to find something else. And this strategy it's basically just about probabilities. It's looking for likelihood of a continued trend. And if it goes up, then you can just move your stop loss up and lock in those gains. And the advantage over the cash secured puts that I was doing is that it's a lot more liquidity. The only reason you'd ever stay in a stock for a long time is if it just keeps going up, which, I mean, I don't know about you, but in my opinion, that's really not a problem. And you can, if you need the money, you can sell at any point if it just keeps going up, right? So anyway, I'm going to let, if I can go back, let this one just expire today, have my $987, and then start looking at some other assets to just buy stocks, basically, and try to follow Felix's strategy. Highly recommend check out his channel. Probably have to see several of his videos to really get a feel for what he's doing. He's always just dropping little nuggets of information in each of his videos. So definitely follow, check out several videos, and in my opinion, it seems like a really good strategy. So that's what I'm going to be trying to do going forward. But that's all for today. I'll talk to you later. Thanks. Bye. Remember to like, comment, and subscribe. Oh!